Alright, hello, and welcome to Camel Finance. I'm your boy Camel, and as of yesterday, as I'm sure you know, we had a 25 basis point rate hike from the Federal Reserve. Shocking, of course. Of course it wasn't, because this was probably the most one-sided, priced-in expectation of a rate hike I've ever seen personally. As of yesterday, there was a 99.1% chance that we were going to see a 25 basis point hike, so that was completely priced in. And I think so was the hawkish language. Powell, to me, seems to have lost credibility. Even when he starts to talk tough, the markets initially sell off, but then as the FOMC meeting continued, markets decided to rally anyway. Markets do not believe the Fed can continue to act tough, can continue to hike rates this aggressively. They've already spoken about potentially slowing the rate hike down further in the future. So whilst there was some tough language in there at times, whilst they were saying things like rates may have to stay high for longer, the market just doesn't care. The market doesn't believe him. And as a result, we are seeing this melt up start to validate. So we can tick off the 50 basis point hike. We already ticked that one off. We can now tick off the 25 basis point hike. The last one remaining is the pause. Was that the last 25 basis point hike? Was that the last rate hike? Are we going to see one or two more? In my opinion, I don't even think it really matters. I think whether we have one or two more or not, or whether that was the last one, I think the market still is going to front run the pause. I think the market still knows a pause is coming over the next couple of months, and therefore this is going to continue to validate. It's important to point out, of course, we do have earnings coming out for the rest of the week, so we'll need to get through those. We've got Apple, Amazon, and Alphabet all reporting today, so we'll need to get through that and make sure they don't all miss. But so far, earnings have been pretty reasonable across the board. So did it turn out to be one of these rare times when Jim Cramer was right? Okay, you got Michael Burry, the guy from The Big Short, telling us to sell yesterday, whilst Jim Cramer says buy. And as it turns out, this might have been the first time Jim Cramer was right. Although technically they were both wrong, since Cramer tells you to buy on the dip and there was no dip to buy. Michael Burry is usually not very good with timing, in my opinion. You can see this here. He was super short there. He was telling us to sell there, and now he's trapped offside even further. This reminded me of 5 months ago, over 5 months ago, there was this big circulation of news and panic because Michael Burry had emptied most of his stock portfolio, and I made this video here. And if you go back and watch this video, what you'll notice is he actually sold back in June. He actually emptied most of his stock portfolio back here. So he really sold mostly at the bottom. You can go and check that out in your own time if you're interested. But I think the point is, this was apparently the right time to listen to Jim Cramer for once. The simulation is probably broken. In all seriousness though, job openings, look, they rose 11 million in December, sending the ratio of vacancies to unemployed workers up to 1.92 from 1.74 in November. But private sector quit rate has ticked down to 2.9% from 3%. So even though there's all these fears in the market, there's all this talk of recession, the labour market remains too strong. There's too many vacancies, there's too many people that can fill those jobs. We're nowhere near the level of unemployment that we need to get to see a recession hit. That does not mean I don't think one is coming. And of course, if you hop into this melt-up chart, I think this recession is actually really close. But I just think first, we've got to go up. Something I need to pay attention to, something we all need to pay attention to, is lumber is up 40% this month. So this could really skew the CPI data if they choose to include it. But this is also a double-edged sword, because whilst this could be bad for inflation, whilst this could skew the inflation data and we could perhaps see a short-term increase in inflation because of this, at the same time, this could be reflective of increased demand for lumber. And the reason that that's important is because lumber is used to build things. Lumber is used as fuel. When there is increased demand in lumber, it's usually a sign of economic growth and home building, things like that. So this is a difficult one, and one that we will need to be keeping our eye on. Either way though, the bullish slingshot is here. Thanks to a strong last day of the month in January, and the S&P 500 has gained more than 5%. And a gain north of 5% in January, on the heels of a red year the year before, tends to be bullish. The full year has finished higher 5 out of 5 times, up 30% on average whenever these conditions are met. So does that mean we can expect to see strong performance for the rest of the year? So I've got a clip here of me showing you a clip of me showing you a clip, I think. But the reason I want to show you this is because we have new structure, new improvements in weekly structure using the weekly chart. So have a quick look at this. So I've got a clip here to show you really quickly, where I outlined one scenario that seemingly Bob Lucas was not considering. One thing I was thinking when I saw this from Bob was, I was wondering why he seemingly has ruled out the notion that this could be a half cycle low. So of course, the dominant trend is down. We've got lower high, lower high, lower high, lower high. So therefore, it's kind of reasonable to expect that we would have to complete this weekly cycle low by progressing further to the downside. But I do also think, and I was thinking to myself, there's a chance that this is going to form a half cycle low, and then we could pop up here and drop into a weekly cycle low much higher up. So there you have it. And it seems that Bob Lucas is finally beginning to think about this. So he still doesn't favor this outcome, apparently. He still thinks that we're going to top very soon and then have a decent pullback. And that, of course, could be right. But my preferred look at this stage is that this is going to continue for a few weeks and form a higher low, much higher up than indicated by both of these weekly cycles. So, of course, that remains to be seen. But for now, things continue to look constructive on the weekly chart as well as the daily. I've shown this a bunch of times, but it's important to show you just in case you're unaware of it. The green line here is the US 2-year yield, and the orange line here is the federal funds rate. Every one of these blue vertical lines denotes a time when the Fed funds rate crossed above the 2-year yield. And whenever that happened, the Fed moved to a pause in rate hikes. That was true of every single one of these cases. And if we zoom into today, what you'll find is that that is exactly the situation we have at the moment. So again, the bond market continues to give us confidence that we may well have just seen the last rate hike. And I think even if there are a couple more token 25 basis point hikes, I still think this market has a good chance at front running this pause. Jim Ricketts here, he thinks we could well see 2 more rate hikes of 25 basis point each, one on March and one in May. That would imply the terminal rate at 5.25%, and they'll pause in May. The markets will front run this pause regardless of whether we just saw the last rate hike or not. So interesting times. As ever, one day at a time. Over in the world of Bitcoin, things continue to look ever so bullish. They continue to improve. The fundamentals continue to blow my mind, frankly. CNN are now reporting on the benefits of recycling the warmth of Bitcoin mining for growing more sustainable food. This is making it into the mainstream. And stick around because I've got some great news to show you. This is a 4.5-minute clip, so I'm not going to play you it, but if you want to go and see it, it's from Documenting Bitcoin. South Africans can now buy plane and bus tickets with Bitcoin at one of the country's largest retailers. Do you see the pattern that continues to emerge and I continue to cover on this channel? In Kazakhstan, the largest airline is going to offer Bitcoin and crypto loyalty rewards in partnership with Binance. Again, continued adoption, that we continue to see continued adoption. The USA, okay, Berlin Bank will be the first FDIC insured retail bank to offer Bitcoin services to their customers. You can buy Bitcoin, let them custody it, although I don't agree with that. I think you should custody your own Bitcoin. Furthermore, you can borrow against Bitcoin using this bank. You can get paid in Bitcoin and you can earn Bitcoin card rewards. Do you see what is happening here? We are about to cross the chasm into mainstream adoption. This is massive news. ARK Invest has said that Bitcoin is likely to scale into a multi-trillion-dollar market. They have 3 cases: their bear case, their base case, and their bull case. And you can see that by the end of 2030, their price target in the bear case is $258,500 per Bitcoin. Their base case for 2030 is $682,800 Bitcoin. And in the bullish case, they could see $1.48 million per Bitcoin. Remember, the US Treasury Department actually published this. This is the projected debt held by the public. And you can see here, this is 2030, 2040, 2050. They're expecting people to just hold more and more and more debt. And FOSS absolutely nails it here. Debt spiral. Pure math that even the Fed can't ignore. Fiat debasement is 100% certain. We're seeing this in Lebanon. Lebanon devalued their currency by 90% as of yesterday. This means before the devaluation, they went 1,500 Lebanese pounds to the dollar. And as of yesterday, it's now 15,000 Lebanese pounds to the dollar. This is why everybody needs to exit the system to Bitcoin, gold, and silver. Central banks know this because they've been buying the most gold since '67. The central bank has bought more than 1,136 tons of gold as of last year, and emerging economies were the main buyers, of course, because their currencies collapse first into the safety of the dollar, and then the dollar will eventually implode. What are they preparing for? We all know the answer. They are preparing to watch all of these fiat currencies collapse into the dollar before the dollar finally collapses. By the way, also written on the chart, roll over with the collapse of everything, including the dollar. And remember, it's not just gold that the central banks are buying. The EU committee has approved the Bank for International Settlement policy to allow banks to hold 2% of their Tier 1 capital in Bitcoin. Remember, the Bank for International Settlement is the central bank boss, the central bank to the central banks. This is not just in the EU, by the way. This is worldwide. Central banks are allowed to hold 2% of their tier 1 capital in Bitcoin. So it's not just gold they're accumulating, it's Bitcoin too. So hopping into the charts, because there are significant improvements across the board. The dollar continues to get rejected at double resistance and make new lows. The US 10-year yield, as you can see, still rolling over. So still looking to make new lows in the near future, I would suspect. The US 2-year yield, again, not raising, not following the federal funds rate. The federal funds rate remains above the current 2-year bond yield. Gold continues to melt up, likely due to the dollar weakness. So not much to say about that. Silver looks like it might be time to long silver on a breakout of this box. So can it close here? Can we get a nice thrust out the top of this box? I think we're going to get rid of this trend line because I'm not sure if it's really respecting this trend line. It seems to be respecting the box consolidation. So I'm lining this up for a trade. I'm not yet long. I'm looking to get long if we can decisively close above this box. We could probably be a bit stricter and lift this higher. I'll figure out how I want to do this. But we'll say this is roughly it. This is where I'm looking to get long if silver can break out of here as the dollar continues to weaken. Hopping into the miners, I took these positions off. Was this a mistake? You know, on this channel, my goal has always been to be the most transparent and the realest trader this platform has to offer. That means I'll show you all of my profitable trades and all of the mistakes. Was this a mistake, or is this about to be break it down, retest and resumption lower? That remains to be seen. I think another way to handle this is potentially to draw a box here and buy the breakout on top of the box, just as we did it the first time. So either way, we walked away with a little bit of profit, but I wonder if I sold too early and perhaps this thing is going to explode to the upside. That, of course, remains to be seen. To me, this looks a little bit stretched, but we're still long here with half a position. You'll already know all about that if you've been following the channel. Still no sign of a half cycle low for Bitcoin. As you can see, Bitcoin continues to push up. So not much more to say about that, apart from long and strong continue to push. Still open to seeing a shakeout before we go higher. Perhaps we'll get it this weekend. If I hop into this fractal chart, you'll see here, wouldn't be beyond the realm of expectation to get a drop. But how much weight do you put on a fractal? Personally, I don't trade off of fractals. I just thought this was interesting because when I first put this here, nobody thought this was possible. Here's the Wyckoff chart, still continues to look constructive in my opinion. So are we about to continue to explode to the upside, targeting 30 plus K for Bitcoin? I think so, and I think it's going to happen quicker than most people are ready for. Whilst we're here, let's point at Ethereum, because I've been saying all along, if Bitcoin's going to drop into a half cycle low, the rest of these coins probably will as well. But for now, Ethereum continues to push up and continues to be carried up by Bitcoin, in my opinion. So I'm just going to let this position run and see what the market can give. XRP, not really doing a whole heap of anything, is it? Still kind of grinding along, but that's okay. The trade is still valid, so we'll see what happens for that. MATIC continuing to push up, starting to lead again now. So I like to see this from MATIC. We held this position through the ups and downs, right? It was valid the whole time, so long and strong continue to push. We've been through hell and high water on this trade, but it finally seems like we didn't get stopped out, and now finally it seems like we're going to continue to push higher. So not much more to say about that. Zcash, similar sort of thing, but is it finally going to start to round to the upside? I think quite possibly it will do. So here's where things start to get super interesting. I'll start with the UKX. Okay, the FTSE 100 seems to be holding this support line, seems to be looking for higher highs in the coming weeks. So that's fine. Long and strong continue to push. The VIX continues to be suppressed, continues to work its way down to what I believe will be the 10 to 14 range, whilst the stock market undergoes this melt up, which you can see here. So I will be keenly keeping my eye on this, looking for any kind of breakout to signal that we might be about to see real downside in the equity markets. But as it stands, from all the way back here, we've been talking about how volatility cannot increase. It keeps getting suppressed as the Dixie comes off. And this has been one of the tools I've used to be able to call this melt up well ahead of time. Dow Jones, what is the Dow Jones doing? It's still sideways, isn't it? It's massive consolidation, still in no man's land. I noticed this yesterday. You could probably connect something like this, which means, is it about to break out of that purple, is it about to break out of that orange downward sloping resistance line and target the top of this? I think quite possibly. However, I don't really put much weight on this. It's all about this red line for me. Get above there, and I think it's go time. So again, similar trade with this. We've been through hell and high water, but I think this is about to resolve to the upside. NASDAQ looks significantly better, as you can see. We've had breakout, retest, resumption. We're holding this trend line. We're above this cluster of local highs here. This is significant structural repair for the NASDAQ. There's no other way to argue this. We've broken the downward sloping red resistance line. We're above this cluster of highs. We've recovered this big green level, and now we are in a new uptrend, and I believe this will continue for weeks to come. The S&P 500 is very similar to the Nasdaq. We are out of this blue downward sloping resistance line. We are now closing above this local high cluster back here. This is significant technical repair, significant start to a new uptrend, and I believe this will continue as well. We are due to find out whether this blue cycle count is correct or whether it's this green one. So we'll get an answer, because if we drop down into a cycle low by about the 8th of February, then we can call it the blue count is correct and reject the green count. And if not, if it continues to push up and then drops down into a cycle low around the 3rd of March, then we can delete the blue count, which I actually currently favor. I favor the green count over the blue count at the moment. But that, of course, remains to be seen. For now, long and strong continue to push. All of these blockchain stocks are doing really well. Coinbase, here's MicroStrategy. You can see Riot as well continuing to push up. So happy days there, and Marathon too. So not much to say about this apart from long and strong continue to push. Tesla looks really, really constructive, as you can see, making new highs. So I expect this to continue, and I will remain long until I have reason not to. Apple, I didn't take the Apple trade, and I said this at the time. I called this out and said this is a trade idea, but I didn't take this trade, and I told you I wasn't going to take this trade because I've already got so much equity exposure. I just really don't need any more. But Apple, we'll see what the earnings are saying. I expect this is likely going to push higher, but of course, if the earnings are bad, then we could see a rollover from here. A couple more things I wanted to cover. Geo, okay, here's Geo. So you can see I've already said this dozens of times. The stop loss has been moved up to here. I'm looking to see this break out at the top of the box, and then we'll add a second position and put that second position stop under here as well, and then see if we can repeat this whole process over and over again. So for now, continues to sort of grind its way up. I want to see this leave, and I want to see this leave soon. But for now, long and strong continue to push. XLC, the XLC position still looking pretty constructive. You can see we broke out above this orange line here. We got long on this first candle, and now we're pushing this trade to see what the market can give. So not much more to say about that apart from long and strong continue to push. And ARKK, I've been saying for a while that if we could chop around inside of this box here and then break out, that would be a long from me. And as of yesterday, that is exactly what happened. However, I have to be completely honest with you here, and I couldn't quite figure this out yesterday. As much as I really wanted to take this trade, as much as this trade is valid, and I actually expect, especially if this melt-up thesis is going to play out, if this is going to play out, which I think it is at the moment, then ARK is likely going to do something crazy. However, I went to put this trade on yesterday. I have a spread betting account for which I use for my leverage trades. They did not offer it to me. I could only close existing ARK positions. They were not allowing customers to open new positions in ARKK. I don't know why, but I couldn't take the position there. So I thought to myself, that's fine. I'll go into one of my other accounts, which are non-leveraged accounts. I tried to buy it, and they wouldn't offer it to me either. So if you can buy it, let me know. Throw it down in the comments. Let me know which broker can offer it. I would absolutely have loved to take this trade, but I'm just being completely honest. I'm being completely transparent with you. Whilst I think this trade is valid, whilst I think ARK is going to go up here, whilst I wanted to get long, the brokers that I use just simply don't offer this to me. So I can't do anything about that apart from delete this and get rid of this. But that trade is absolutely valid. It's just a shame that for some reason, like I said, my brokers don't offer it to me. So ARKK has gone out the window as a trade idea. Sometimes you just have to let them go. So that's about it from me. Things continue to look constructive. The melt up continues to be slowly but surely validated. Things can change, and they can change quickly. Remember that. But as it stands, they haven't changed yet. We do need to get through earnings for the rest of the week. So it'll be interesting to see how the weekly closes go. Hopefully we can get some bullish weekly closes, because to me, and in my mind, that will validate this melt up completely. Then the question becomes, how high up does it go? Does it actually make a blow off top with new highs like I think it will? Or is it going to stall out halfway up? And of course, then the thing we'll have to deal with is, how do we get out at the top? But of course, I will show you how I do that. I have absolute confidence in my ability to get out near the top. And as I've said a couple of times over, I think we're going to make massive money short in the crash, and I also think we're going to make massive money longing the VIX from the bottom. So, in the meantime, as always, look after yourselves, take care from me, subscribe if you want to see more, turn the notifications on if you want to continue to get updates on all of these trades in real time as a pro swing trader. And until next time, take care, all the best, cheers, bye.